Hello and welcome back to my YouTube channel. You know what we do here? We try to make money, make money, make money. Okay, so today we're going to be talking about life insurance. We're going to be talking about how we can have cash value with life insurance. So I hope you're ready for today's video. And if you're new here, please like, share, comment, and subscribe to my YouTube channel. Okay, let's get started. We want to talk about cash value of life insurance. Okay, that's what we're talking about. So when you add a cash value aspect to your life insurance policy, suddenly everything changes. No longer is it just a way to protect your loved ones in the event of death. Now you can start thinking about building and really accessing wealth while you're still here alive and kicking. Okay, sipping on your coffee from Starbucks. But I'm telling you, you got to know all the factors involved. And the first thing is you got to know about cash value life insurance. And in case you don't know what that is, I'm finna break that down to you so you'll understand. Cash value life insurance is a simple thing. It allows you to build wealth with the policy that you have. You essentially pay into two pots each month for the premium when you get the coverage. The death benefit and the second one is the cash value. Okay, you got that? Two different pots each month. One is the death benefit and the other is the cash value. The money for the death benefit grows the amount you leave to your beneficiary, like your husband, your wife, your children, after you pass away, while the cash value increases and it can be accessible while you're still alive. So that is what we're talking about today. Now, the following permanent life insurance policies offer cash value aspect that we just talked about. And that would be, whole life insurance. It'll be universal life insurance, variable universal life insurance, guaranteed issuance life insurance, and what's the other one? Indexed universal life insurance. So the cash value element is very important, but it is separate from the death benefit. You have to understand that. It's important. The cash value is very important. We get that. But the death benefit and the cash element is two separate things, which means that anything left in your policy reverts back to the insurer when you die. So if you drop dead tomorrow, then it would revert back to the insurer. So how the money bills depends on the type of policy that you purchase. Okay? So it's different things. So let's talk about just a small snippet of it because we want you to get a great understanding of the whole process. Okay. With whole life insurance, you get a fixed monthly premium, but you also get a guaranteed death benefit. It's guaranteed. The premium payments that you pay for this whole life insurance will never change, which means you pay the same amount every month throughout your life. So that's what whole life insurance is. The cash value simply accumulates over time. And you can also use your company dividends if you receive them. Everybody don't get them, but you can use your company dividends with your whole life cash value every year, and it will build up in a much faster pace. And the other one I really want to talk about is guaranteed issue life insurance. Guaranteed life insurance is available in small coverage amounts, such as about 20 grand maybe. Some guaranteed life insurance policies feature a cash value element, and that's what's important. That's what we're talking about, the cash value element. So the potential to build wealth is lower than the other option I just told you about because the amount of money is so small in comparison to the whole life. You see what I'm saying? So you can't be rejected for guaranteed issue life insurance, but your beneficiaries won't receive the full payout. If you die within a few years of, if you drop dead, if you die within a few years after buying guaranteed issuance life insurance, your beneficiaries will not receive the full payout. So you have to do your research. That's what I always tell you. You have to read. You have to go online. You got to read. Okay? So basically, I just told you about the two ways, but you can access the cash value element of permanent life insurance by withdrawing the money directly, or you can take a loan out against it. So, so you make the decision on which policy that you think is what you need, because life insurance is another one of those things that you don't think you ever need it, but it's good to have. So if you decide to terminate your policy, anyway, we don't want you to terminate the policy, but if you terminate the policy, you can also access the cash value that you have been building up, but minus the penalty, because they'll give you a penalty for leaving and terminating your policy. This is known as a surrender charge, and you need to write that down. You need to do your homework and know that if you terminate your policy and you decide to access that money that's in that cash value element that's in your insurance, it's not going to be the whole amount. It's going to be minus the penalty for leaving. And that penalty is called a surrender charge, which is in place if you cancel. I think it's within the first couple of years after purchasing your coverage. So that's something to think about. And if it's just like taking out a loan, making a direct withdrawal also affects the amount of life insurance that's left for the death benefit. Okay, read it, people. You have to read it. Okay, it's really that simple. So, I want you to take advantage of all the cash value that life insurance have, and that's why we're doing this video today, because I want you to take advantage of all the options that you have. And also, let's talk about this for a minute. There are so many tax advantages of cash value life insurance. If you use a loan, for example, to withdraw the cash value, you can benefit from building your wealth tax free. That's right, people, tax free. Okay, so let's wrap this up. So basically, the pros and cons of cash value life insurance, let's just go over that real quick in this video. The pros are it can act as an asset, it's guaranteed death benefit, it's tax-free savings, and you pay the dividends. Now, the cons is permanent life insurance is actually more expensive than term options, and you have more risks. So that's something to think about. And also the surrender charge that we talked about. So you can access this cash value. Okay, so that's all I got for you today. I want to thank you for stopping by and watching my YouTube channel. And we got a lot of good information in today about how you can access the cash value in your insurance. We talked about whole life insurance, universal life insurance, which type of life insurance policy is good for you. So I hope you enjoyed this information, and I hope it was useful. And if you haven't already, please like, share, comment, and subscribe to my YouTube channel. Until next time, remember, make this money. Make this money.